Consumer confidence is up. The labor market remains firm. We talk a lot about the data. Let's go to the restaurants directly with the team at Red Robin Gourmet Burgers. Shares are up more than 60% over the past year. The Chief Executive Officer joins us, President and Director Gerald GJ Hart. GJ, thanks for being on the show with us this afternoon.
Great to be with you. Thanks for having me.
Appreciate that. Your shares have been climbing, and we need all the information we can get about what's happening on the ground for the consumer right now. Give me an idea where you guys see the second half of this year in terms of customer traffic, in terms of spending ability.
Sure, I'd be happy to. Well, listen, I think what's great about what's going on is the consumer seems to continue to be pretty resilient, and that's a really good thing. So at the end of the day, whatever this economic cycle is, I think that we're going to get through it fairly fast, and I think the consumer on the other end is going to be stronger. So we're feeling good about that, but nevertheless, we have our own set of plans and things that we're dealing with within that, so it keeps us pretty focused.
That seems to have played at least some part in the rise of your shares over the past year, your North Star turnaround strategy that you've been at the helm for since you began your tenure pretty recently in 2022. Tell us about the details of that, where you are in that strategy.
Absolutely. So I came in as the CEO in September of 2022. And listen, Red Robin is an iconic brand. It's a piece of Americana. It's a brand that has resonated in casual dining for a long, long period of time and got a little bit distracted, a little bit off course. And so for me, developing a North Star strategy about really what are we all aligned to? What's our mission, vision, our purpose? What are we trying to achieve here? And that's what we set out to do with this 5-star plan. And really, it's taking back this niche of this competitive advantage that we have within casual dining, which is about family, kids, fun. It's about a slice of Americana led by our gourmet burgers, bottomless fries, great shakes, and just a great experience for folks. And so we're bringing that back to Red Robin and bringing back fun to the brand. And it's starting to resonate. And we're in our early stages of this plan, but we're feeling very good after our first quarter results in terms of that the plan is starting to work.
You're bringing me back to my childhood just with some of those keywords there, so I can hear the message loud and clear. It seems like that is a good brand to take in a market where there's been a lot of fast casual success that's just about the individual getting in, getting out. You guys are about the family and catering specifically to that experience. A look at the latest earnings. Your next report's coming out in August, so we'll look back a little bit here from your previous quarter. 9 consecutive quarters of comp sales rising, but the last one by a fraction, about 0.5%. So how do you maintain that streak?
Well, it's continuing to stay focused on our plan, which is to deliver on that guest expectation. I believe that that the guest is going to want to have experiences again as we come through and have come through COVID and where we sit today. I believe casual dining, for those operators executing at a high level, have the opportunity to get a bit of a tailwind as this consumer cycle runs through. So from our perspective, being able to deliver on those expectations that our guests have had for 50 years for this brand is what we're going to deliver. And as long as we do that and do it well, we'll have success.
Can you do that without having to raise costs? Can you make the experience what you want with the structure of spending that you have so that you can shore up the bottom line and continue to grow profits? What's that trade-off look like between marketing and getting the experience you want with also managing costs?
Well, listen, inflation has certainly been the thorn in our industry for quite a while, and clearly it's a problem in all industries. And yes, we have to be cognizant of that. But in my opinion, what we're doing at Red Robin is putting quality back into the brand, is going back to some of the basics of really delivering on high quality, and that you'll ultimately get that back from the experience that the guest gets, and that their frequency will raise as a result of that. So we're working hard to take elements and actually invest more back into the business versus trying to extract cost. I think this company has done that for a long period of time, and I don't believe you can do that and build a sustainable brand long term. And so what we're doing is raising our standards on how we cook our burgers and the ingredients we put on burgers, optionality for the consumer in terms of other products, entrees, pizza, etc. We're going back to a real hospitable type of an experience versus just let me get you in and get you out, while investing more in labor in the restaurants and giving folks an experience that they would expect. So we're going the other way, and we believe that will pay dividends. And the way we're paying for that is we're continuing to analyze our business and be as efficient as we possibly can be by being an operations-led company. So everything that we do is supporting those operators out there that are executing 500 plus restaurants every single day, and everything else really doesn't matter. It's how do we do that when you can drive costs out that way and put it back into food quality. In addition to that, just from a marketing perspective, we're going back to being parts of communities. This brand is a community brand, and that's what we were built upon. And so we're going back to that and investing the dollars we were spending in national marketing, currently investing in food quality, community involvement, and overall taking care of our team members. So it's a little bit different of a mix, but we believe that long term that's the right decision.
Sounds like a very well articulated and targeted plan here that's very experience-centric. To reiterate then, or maybe to project, correct me if I'm wrong, it sounds like as investors or traders, when we're watching your earnings then over the next year or so, we should be prioritizing revenue top-line growth as opposed to bottom-line growth. Is that a fair assumption then?
Not necessarily. I think we have the opportunity to expand restaurant level margins as well. And then the guidance that we've given to Wall Street at this point does exactly that. So we're growing top line, but we're also growing our overall earnings as well. And again, it's just managing those expectations. And, part of the five-star plan is that we earn respect back and we earn our way to continue to move faster in this plan. And the way you do that is by making more money.
All right. GJ, we'll be in touch and certainly following along with the story. Appreciate you bringing us the expectations and the plan.
We look forward to it, and thanks for having me.
Absolutely. GJ Hart is the CEO, President and Director at Red Robin Gourmet Burgers. All right. Quite a turnaround plan, a good story for us to watch in the restaurant business.